Hello and welcome to Indianomics. It's a jubilant Indianomics. It's a stunning growth number that we are looking at. India's first quarter GDP growth has come in far higher than expected at 7.8%. The CNBC-TV18 poll indicated an expectation of just 6.8%, and we were still higher than many people on the street. The contribution from government expenses, both capex and revenue expenses, and the services sector is particularly impressive. Let's decode the numbers with our experts. I'm joined by Radhika Rao, the senior economist from DBS Bank, Sakshi Gupta from HDFC Bank, all senior economists, Kanika Pasricha of Union Bank, and Aditi Nair, the chief economist at ICRA. Ladies, what a pleasure that all of us are going to discuss an extremely encouraging and optimistic number that we have. Just a word to our viewers before I come to you. The 7.8% number sometimes gets overstated because there is indirect taxes, very low subsidies and very high indirect taxes compared to the base year makes the GDP look very good. No such tomfoolery over here. The GVA, which is net of the taxes, is also very high at 7.6%. It's a 6-quarter high. The GDP is a 5-quarter high. So, it's unabashedly and unadulterated a good number. The other argument we normally have is that nominal GDP at 8.8 is not all that high. It's because inflation is very low. So you are deflating the nominal GDP by a very small 1%. WPI being negative for 2 months has led to the GDP looking very good. Even that argument doesn't wash because from the poll I got, even the nominal GDP came in only at 8%, whereas the actual number is 8.8. So the data has outshone what economists were expecting on every parameter. This is a damn good number. I was expecting that economists will have to revise their forecast lower after they see the first quarter. Now they will revise their number, but mostly higher. Likewise, the RBI, we thought, will be forced to bring down its GDP forecast. It stands at 6.5% higher than the rest of the market. Now it will probably revise it higher. But let me, with that preface, get to our experts. Sakshi, you go first. What surprised you, and will you be revising your numbers?
Right, Lata, I think at the headline level, of course, this number is very, very surprising for all of us. You already spoke about the fact that this growth is being underpinned by a strong services sector growth. But let me just point out that, the deflator for services is in fact very, very low for Q1. It's just about 1.9, which is much lower than what we have seen over the last, I think, 5 to 6 quarters. Be that as it may, I think the biggest surprise for me actually in this data was, 2 numbers. One was agriculture growth, which in my opinion is much lower than what we were anticipating, especially given the fact how, the Rabi crop performed, also that this number is coming on a very low base. So I think 3.7 to me seemed like a low number. On the other hand, I think the manufacturing growth number that we have in this data is 7.7. Which is significantly higher than what we were estimating. And I think it doesn't completely align with, some of the high frequency indicators that, we had tracked for Q1, for instance, IIP growth. We must remember that, a caveat that we must remember that, quarterly numbers are prone to revisions going forward. Be that as it may, you are right that this number does show that economic activity held up in the first quarter. But the problem is that, I think the pain from things like tariffs are yet to be seen, and that was very much expected even before this number came out, right? So my estimate for the year, I'm keeping it unchanged for now at 6.3. I think that we'll have to wait and watch how some of the impact of the 50% tariffs is going to start playing out in the second quarter, and I think consequently the numbers that we see are going to be lower.
Okay, fair point. Actually, exactly the same number surprised me as well. My average for agriculture came in at 5.8%. So this 3.7% is a surprise even versus our poll. Likewise, manufacturing for us had come in at 5.3%. Here at close to 8%, that also is a surprise. So clearly, the numbers have surprised not just you, but all the respondents whom we polled. for the CNBC-TV18 poll. Aditi Nair, if you can look at the GDP from the expenditure side, personal consumption 7%, government consumption 7.4%, and capital formation 7.8%. Any surprises there?
Thank you, Lata. So certainly as far as the expenditure side is concerned, with the investment indicators, particularly government capital expenditure having grown very sharply on a small election curtailed base, we were expecting that GFCF will post a very healthy growth. So no surprises there. And a similar argument for the government part of consumption expenditure and overall government spending. I think I'm just a little bit surprised if we look at the last 5-6 quarters of the private final consumption expenditure data. The growth all ranges between 6 to 8%. And here, I mean, quarter after quarter, we've been lamenting about the state of consumption, clutching at straws that rural consumption is doing a little better, urban is uneven, it's only being driven by the high-income households. And we have a 7% consumption growth for the private final consumption expenditure in this quarter. So I think, like what Sakshi said, if we look at the sectoral side and compare it with the high frequencies we had and compared with the kind of earnings we've seen, there is a discrepancy. Similarly, within the expenditure side, it's not really gelling with the kind of commentary we keep hearing and the narrative we keep discussing on the consumption side. And discrepancies, again, I think have turned around. There's a large increase in discrepancies between Q1 of FY25 and Q1 of FY26. So that will also have some impact on the underlying expenditure side aggregates. So overall, I would say I totally agree with Sakshi. This number has come in much better than what we expected. But the pain entirely lies ahead.
No, I take your point that, the number has come in higher than expected, and it is not gelling with some of the high-frequency numbers that we see on a daily basis. FMCG companies, complaining that they don't see too much consumption. I mean, we see it all over the place, and therefore the number does surprise us that both consumption and capital goods have come in good. Kanika, the export number, I thought, that one of the reasons why GDP would do well would be that people will advance book exports. But it's only up 6.3%. So it looks like we may, in the second quarter, for July, August, also see a very good export number because it doesn't seem to be pre-booked over here.
So you're right, Lata. Maybe, the number for July and August in terms of exports may throw up some positive surprises. But see, Lata, what is very important is, yes, exports growth. While we all said that the reason, so we were at 7% for this quarter, while the consensus was 6.7. And one of the reasons we were at 7% is the theme, the underlying fundamental framework was that everything is front-loaded in this quarter. Exports, US didn't slip into a recession, global demand has not slowed as much as feared. And of course, it's front-loading ahead of tariffs. Apart from the favorable base effect because of election quarter, same period last year. But very important point to note is, while exports growth is looking relatively tamed, your imports growth is also held up. So we were looking at percentage point contribution of net exports to GDP. In the last quarter, of course, it was a surplus. So it was +2, +3% percentage point contribution. In this quarter, it becomes a negative. Yes. -1, -2. So there's a switch over as well, which is also weighing on overall growth dynamics. So while we thought exports front loading may help in this quarter, it has not happened. Maybe some impact will be seen in the second quarter, though I would still say September may be a washout. The kind of scary stories we are hearing from the MSME exporters is not so positive to take back home. But very important, in our view, this number is not due to front loading of exports. The surprise is coming from consumption, as both Sakshi and Aditi pointed out, which is why trade is up 8.5%. Very important, and private consumption is up around from 6% to 7% March to June. That's one. Second, even real estate and financial services have done well. That number at 9.5% is also a very positive surprise, apart from, of course, manufacturing. Thanks.
No, absolutely. That was precisely my point. I would have thought exports would have been very good. but it's a very pale 6.3%, which means something else has fired up since the overall number also is above everyone's expectation. And it is not even because of exports, which means domestic consumption and domestic capital formation has done so well, so much better than the general expectation. Radhika, from your perch, do you think now the global view of India will change? It may perhaps be able to weather the tariff storm better.
Hi, Lata. Certainly, I think this number does come. I think it's more than 1% higher than where the market consensus was, heading into this data. So it does show that even as a starting point, growth was at a much, much stronger level. And what you've seen is that, where you spoke about deflators earlier on, and that is a bit of a technicality because an industry breakdown, deflators don't impact as much as services does. So services does is adjusted for deflators because you're getting from volume to value. So from that point of view, there is a bit of a technical push to the headline, but certainly anything above 7% in an environment where, dark clouds are gathering, so to speak, is a very strong starting point. Now, looking at some of the breakdown as well, I think you spoke about trade briefly. And what we are seeing in the region as well as in India's case is that growth exports to the US, for example, have done very well. There's a lot of signs of front loading there. But if you see rest of the world, you don't necessarily see that bump up. And that could be one of the reasons why overall exports, you really don't see that amount of pickup. And coming to the other growth drivers, certainly domestic anchor remains very, very important. I think the global environment, global trade, that's going to get a lot tougher. But I think insofar as consumption holds up, investment by the government spending point of view holds up, that works very well. And I think the other bit on services, we look quite closely at the trade and that breakdown, and that which is labor intensive, that has also grown by upwards of 8%. So certainly a lot of positives in this outcome. And I think, but when you look at the rest of the year, there's going to be two-way forces. There are still positives by way of the GST rationalizations that's coming up. And, rate cuts hopefully transmission as well. But on the other side, you're going to see the impact of the tariff, I think, which will be more obvious in the second half of the year. I think there's one more quarter where we could see decent, growth and not really affected by tariffs as yet, because this was a late August phenomenon.
Okay, ladies, I need to take a break on that note, but thereafter we also have to discuss what impact this will have on the Reserve Bank and what impact it may have on the government, which will have to design some fiscal packages for exporters. We're coming back in a minute.